Good afternoon, everyone. Thanks for joining today's webinar, Financial Applications Integration, Getting Ahead of the Curve. You will see your webinar pane in front of you. Please note the orange arrow will allow you to minimize or maximize the pane. If it is minimized, simply click on the orange arrow to bring it back. Feel free to submit any questions that you have for our presenters throughout the duration of the webinar. Our presenters will handle questions at the end as time permits. If you're using your telephone to listen in our webinar, please make sure you select Use Telephone. If you're listening in through your computer speakers, please select Use Mic and Speakers. If you have the incorrect setting selected, it will produce an echo sound. And with that, I would like to introduce Dave Burlington, who is our partner in charge of cloud solutions. Dave is an experienced software product executive specializing in building and scaling high-growth technology companies. Dave has deep experience in leading all aspects of enterprise SaaS and mobile application product teams. Dave has also previously held a range of positions including COO, Senior Vice President of Products and Group VP Applications and Technology. My name is Sartaj Kaur, and I'm a part of the Cloud Solutions team here at Armanino. My focus is on business application integrations. I continually work with Armanino's business leaders to develop best-of-breed prepackaged integrations. So with that, let's cover our learning objectives today. Participants will understand the current landscape of applications present in the finance organizations, discover how growing organizations in your vertical are integrating key business applications to save time and money, as well as review essential features and functionalities you should look for in robust integrations. And with that, I'm going to turn it over to Dave.
Thanks, Sartaj. And in a few minutes, Sartaj is going to give some great examples of specific clients who've implemented some of the suggestions. But I wanted to spend a few minutes and just walk through some of the general challenges and opportunities I see with the rise of cloud applications. The proliferation of financial cloud applications is a huge opportunity for finance organizations and CFOs. It allows them to select and implement solutions that are tailored to meet their specific business needs and the specific needs of their industries. The challenge is as the number of these applications and solutions grow, so does the need to integrate them to ensure that you have integrated business processes and a holistic view of your organization. The good news behind this is most cloud applications are built on modern architectures with open versioned APIs, which make them much easier to integrate than previous on-premise generations of products. But oftentimes the landscape is a little bit more complicated because companies, as they transition to the cloud, have a mix of cloud and on-prem, leaving them with what I would call a hybrid architecture. And really the result of all of this is it really means that organizations need to have a comprehensive strategy and a comprehensive roadmap for integrating all of their financial solutions, again, to ensure that they have integrated business processes and an integrated and holistic view of their organization. So if we take an example, and I talk about the proliferation of cloud applications, this is a sample client, a software client of ours, but if we looked across any of our key verticals, you'd have a similar slide with some different names on, depending on the industry. But with a software company, so the unique needs of a SaaS company with subscription billing, companies like Zora have emerged as best practice in managing subscription billing for software companies. Adaptive Insights has established itself as the leading cloud provider of budgeting and planning and corporate performance management solutions. Avalara, an established leader in managing the complexities of dealing with state tax. Coupa is a leader in managing spend and procurement, which is becoming increasingly important in distributed organizations. Intact, which is the leading cloud provider of core financials, so core procure to pay and order to cash and procure to pay. For many tech companies, Certant is a key component, which is cloud-based equity management solutions. For growing companies and companies that are looking to go public, FastPath provides key functionality around segregation of duties and ensuring compliance. Microsoft Dynamics CRM, one of the key leading cloud providers of CRM solutions. And Click is an established provider of kind of cross-product business intelligence applications. And again, as you look across any industry, if you look in the finance organizations, you begin to see more and more examples of 5, 10, 20 different financial applications. And again, the need to have these orchestrated in a way that supports the business process becomes key. And so when we talk about integrating business applications, it's really key to bear in mind that this is not about integrating data. It's about orchestrating information across systems, and business processes typically cross multiple systems. An example I've often used is in our experience in integrating Intact and Adaptive Insights. Again, it's not just about integrating the data between the systems, but addressing some of the key functional issues that customers need to address. How many planning models do I have? What level of detail do I want to use to do my planning? What's my frequency of doing planning and budgeting? And as I integrate from Intact, how many dimensions am I going to leverage? And then how do I want to take the resulting plan and budget and reflect that back in my core financials? Those are all some of the key questions that you have to address just across that one business process. If you look at each and every business process, there's a related set of issues and questions that need to be contemplated and included as part of this roadmap and strategy for your integration approach. One of the things that Armanino has been a leader in recognizing is the opportunity to deliver prepackaged integrations between many of these leading cloud and on-premise financial solutions. And really by delivering prepackaged integrations, we can achieve the following benefits. First and foremost is we can leverage best practices, really our intellectual property that we've developed over the past 4 or 5 years as we've been doing hundreds of these integrations for our clients. They're built on a robust leading integrations platform that supports both cloud and on-premise solutions. Again, so you have an integrated environment for doing things like monitoring, error reporting, support. Each of these integration packs, as we call them, are configurable to meet the needs of your individual business. Kind of going back to my example, all of those questions around how Adaptive and Intact can be integrated can be addressed through configuring the integration packs. But doing the configuration doesn't violate the big premise of SaaS, and that is that you maintain upgradability and you continue to have a lower total cost of ownership. So we really believe, and they become easier to support and maintain. So we really believe going forward, this is really a big advantage for our customers. It lowers their total cost of ownership. It increases their speed to implementation. And again, it really allows them to fully realize the benefit of SaaS applications, and that is having an appreciating asset that continues to be upgraded and having a lower total cost of ownership. And so when you tie it all together, this is where this roadmap really pays off. You obviously can't integrate everything at once necessarily, but by having a coherent integration roadmap, the result is a cohesive landscape where you have really implemented best practice, world-class best practice business processes that, again, cut across many of these solutions. And really, the benefits of having this are you eliminate silos of information, which I'm sure many of you are familiar with. where information is essentially trapped in one system and either needs to be manually moved to another, which leads to errors and incomplete information. Certainly you have increased efficiency, but I think really the biggest benefit of implementing and having a strategic framework for integration is you get better insight and visibility into your business because, again, you've implemented world-class business processes. So with that, I'm going to turn it back over to Sartaj, and we'll get into some specific examples of clients who have done just that.
Great. Thanks, Dave. So before we jump into some specific examples, I wanted to pause for a sec and talk a little bit about some areas of focus within key verticals today. So within the SaaS software space, we're really seeing a rise of the subscription economy, which is affecting billing, revenue recognition, and budgeting. So what I mean is the subscription economy refers to, businesses offering subscriptions to consumers. Examples of these include Marketo, Salesforce, Workday, the list really just goes on. So what's happening is that there's a shift from the product economy where you're paying for something once to a subscription economy where there's an ongoing cost for something. Businesses now need to handle customer loyalty, pricing, and even selling very differently than it was done before. So this is where we're seeing applications like Zuora for subscription management come in and become more relevant in how they're affecting billing, revenue recognition, and budgeting. So once where it was okay to have a fixed priced product really perpetually, now it's becoming a realm where we're seeing organizations continually fluctuate their pricing with renewals, with certain promotions, with different terms, and your ERP system may not really be able to handle that. So integrating your tool you may be using, such as Zuora for subscription management, allows you to play around with these different pricing models, but still have a tightly integrated process with how you're recognizing revenue as well as budgeting. And really touching on the budgeting piece of it, in the software industry, there's really a unique there are really unique budgeting needs that stem from the fact that they typically recognize revenue over a lifetime of a contract rather than when business is booked. So planning complex revenue recognition with its P&L, balance sheets, and cash flows impact, and really you need robust planning for that. So we'll get into that a little bit later with a customer example that I have, but it's all tied together, and really leaders in the space are ensuring that they're tackling this new realm head on. So within the financial services or professional services space, there's also a few key trends and areas we're seeing where there's a lot happening. So in terms of project management, professional services are looking to increase the visibility of every project in their portfolio. So to manage risk more effectively, to make more effective use of resources, they're turning to tools such as Keyed In, where you can fully automate every aspect of a project and its delivery. So, from forecasting your demand for resources across pipeline and existing projects to accurately billing completed work. And again, having that tied back to your ERP system ensures that all of those fluctuations within resources and how you're deploying those resources are effectively billed and tracked in your system of record. Another area we're seeing here is spend, right? So to control services spending, many of what's procured in the space is services rather than goods. Things like contingent labor, consulting services, advertising, telecommunications, legal services, and spending decisions about services are often made by specific business units, and that can be a lot more difficult to plan and analyze and control. So there's tools out there like Coupa, which help you achieve significant cost savings from service procurement by enabling more competitive sourcing and streamlining the process, and enabling you with preferred suppliers. And having that integrated tightly with your ERP system allows increased visibility into the business. So for example, if you're able to pull over your budget into your procurement tool before you're making a spend decision or someone in your team is making a spend decision, they can actually see, oh, hey, I only have X amount left to make this purchase. Is this really the right solution for me, or is this really the right solution for the team? So it takes out the friction between the systems, and that's really what having your key applications talking to each other, that's the goal. And then lastly, we're seeing a lot around segregations of duty. So what that is tools like FastPath out there, which allow you to analyze who has access to what aspects of an application, such as your ERP system. It's designed by auditors, and it's really how to quickly use and analyze software for potential segregation of duty conflicts. So if there's a change being made in your ERP system, do you have an audit trail for that in the future if you're, say, looking to go public, and you can recognize, oh, these are the people that have access, this is how that information could have been changed or manipulated. So a lot happening in the services space as well. But lastly, I also wanted to touch on the not-for-profit vertical, and really I think client-customer relationship management is important to all verticals, but specifically for not-for-profits, it's more important than ever to organize your contacts, donors, constituents in a robust manner, because at times they can be your only source of income. So I think the obvious call out here is that there are many different types of not-for-profits, from charitable organizations to civil leagues to professional associations, recreational clubs, or even fraternal societies. And each one has a different source and a different process in how they're running their business and how they're basically getting money. So that in itself can be unique in how to manage relationship management. But we're going to give you a few examples of how some of our clients have done it, and hopefully share some best practices with you on that. So with that, I want to jump into our first example. So kCura is a web-based e-discovery application, and basically helps organizations manage large volumes of electronic evidence. What they did was that they were using Adaptive Insight for their budgeting tool, and they have Intact for their ERP system. And what they realized was that they really needed to integrate key data between them, because they had a very manual and somewhat error-prone process prior to integrating. So basically today, they're migrating actual balances, transactions, deferred revenue from Intact to Adaptive Insights. They use all of that information to do their budgets. They take the completed budget back into Intact to have in their GL as a record moving forward. And really all of the information, if there's any changes made in the budget within Adaptive, for example, because it allows rolling forecast, those get updated in near real time within Intact. And really what we're seeing is that there's a huge time savings there, right? So prior to having these systems integrated, they were spending a few hours at month end creating multiple import sheets. And now they can load all of the data in 10 to 15 minutes and quickly get to really analyzing that data. There's also a benefit during the short window they have to complete the quarterly forecast. So because it's easy to load and delete and reload actuals, there's multiple times before month close that they can upload actuals and get a sense of how the quarter is going to end. And that's, again, really beneficial for their accounting team. And lastly, there's less of a risk in error. So manually creating lookup tables and then creating import workbooks allow for a chance of bad formulas being used, and fully automating this process has really made that less of an error-prone process for kCura. So next we have Marketo, and Marketo is, of course, the leading marketing automation tool used by Fortune 500 companies, and I think it's pretty well known in the SaaS software space. A lot of you may be using it as well. And so we have a pretty tight relationship there with Brian Kenyon, who's the Group VP of Finance, and when they implemented Coupa kind of to automate their whole procurement process, they quickly realized that they wanted to have a tight integration between Coupa and their ERP system, which is Intact. So what they did is they decided they wanted to bring over actuals, vendor master records, payments, as well as budgets from Intact to Coupa, and then push invoices back into Intact. So this goes back to kind of the process I was talking about earlier, which was, for example, if Marketo is making a spend decision on upcoming marketing activity or any upcoming purchases their team would like to make, they have full information on how much of the budget a particular business unit may have left. And they can execute that decision against that budget versus potentially having to tap someone within accounting or their business leader and understanding, oh, how much is my budget? How much can I really spend on this? So it really takes the friction out of the systems, and it's helping them scale and really kind of realize growth in that sense. So that's one of the ways they're helping their teams be more effective. I also wanted to touch on a couple examples of how not-for-profit organizations are eliminating manual processes. So this is a client we have. They're a not-for-profit research institute, and basically they produce studies and they conduct research within their industry, and they get funded in two ways. So the first is they get grants from big players within their industry, and the second is that they sell their research online. So someone, a smaller organization within that space, the government, they can also get their hands on the research. So a couple of things happen here. The first is that when a grant is issued, they take that information, it's stored within their ERP system, but it also becomes specific programs within their CRM tool. So the development of an upcoming study or conducting any research within a particular field they become programs within their CRM tool, which is Microsoft Dynamics CRM, and their ERP tool is AX. And so what that does is as they become programs, any cost allocated, for example, with conducting that research, can also get tracked against the program. So there's instant cost-benefit analysis that's occurring, as well as effectiveness of any marketing initiatives that are happening, of any positive feedback they're achieving from constituents reading their research. So all of that can get tracked as programs within the CRM tool. And the second thing is that because they sell their research online, they have an e-commerce website where people are buying their research, and so they've integrated that with CRM as well. And what they're able to pull over from their e-commerce website is which studies are getting sold and how that's getting tracked against those programs. And those get funneled back into the ERP system as customers and then as items and products, as well as if they have a case study sold, that gets tracked as a sales order. And if the invoice has been paid, then again that gets updated in the system of record. So it really has increased their visibility into the business, and it has increased their ability to see where and how much of an impact they're making, what studies are actually the most costly to execute on and are realizing the least amount of benefits versus the ones that are very popular and are seeing high ROI. So it's led to a lot of an elimination of their manual processes and increased visibility into the business. And the second second example I want to show is another organization that we're working with, and this is a human trafficking organization, and really they would fall more into the charitable organization realm, and they've chosen a much simpler kind of flow for their integrating their CRM system and their ERP system. And really what it does is they take account information from Salesforce and they send that data within Intact as a contact record data to create or update Intact client records. So an account within Salesforce becomes a client or contact import within Intact, as well as if there is a change within that account information within Salesforce, it also gets updated within Intact. And that's kind of how they're keeping up to date with all of their donors and making sure that they have the most current information on all of those constituents. And the second thing is really their sales invoicing process flow. So what they're doing is they're pushing sales invoice payment transactions into Salesforce from Intact and anything associated with their account record. So what this does is validates their master record into Salesforce, and if there's anything that doesn't matches, it provides an error message if client and contact records are missing. So again, it's increasing and forcing all of the records within both systems to be the most up-to-date, because that's going to be essential whether you're booking a donation or a pledge, but then also wanting to reach back out with a thank you letter for that donation and put them on your next list for marketing initiatives. And it's, again, causing an increase in how they're managing the relationships, increase in transparency within the business, as well as a decrease in the manual processes within the business. So I'm going to pause there for a second and just say that I know we only have a couple minutes left, but all of these examples are intended to share how other businesses within maybe your verticals are eliminating these silos of data, as Dave mentioned before. And really the goal with the move to the cloud is ensuring you're able to migrate key information within key applications so that your employees aren't doing manual tasks that don't have to be done anymore. So I don't know, Dave, if you want to add a few more points after that, but.
No, I think it might make sense to open it up and see if we have questions. We've got a couple of minutes left.
Yeah. So if you have any questions, this is a good time. Your webinar pane is in front of you if you want to submit any questions. Okay, we have one. Are these integrations, are they robust enough to handle upgrades to key applications, or typically are you coming in and having to do more work every time there's an upgrade to a core application?
Yeah, it's a great question. So in the example again of our, say, Intact to Adaptive Insights integration pack, they've been constructed in a way that are essentially sitting on top of versioned APIs. So when the underlying system upgrades, we're still using the same version of the API. That gives us time to migrate to the new version in a test environment, ensure that we're, haven't had any regressions. It also allows us then to take advantage of any new functionality that may have been exposed by a new API and introduce that, as part of an optional. We'd always introduce it with it turned off, but allow for that functionality to be exposed for our customers. So, not only are they durable in that they can survive, they survive the upgrade, but they're also able to take advantage of new functionality that comes along with them.
Yeah, perfect. Okay, with that, I think we're out of time, so we'll go ahead and wrap up. On your screen, you'll see both mine as well as Dave's contact information. Please feel free to reach out to us should you have any further questions. Thank you for participating in our webinar today. As you exit the webinar, please take a minute to fill out a brief evaluation. Your feedback is very important to us. Thanks again, and thank you for joining.